Let's get your home loan rate down. We understand how important managing cash flow is for investors. That's why talking to one of our brokers can help you find the best loan options and a better rate. Your Finny loan expert will assess your loan and quickly spot a better option if it's out there. With access to over 70 lenders and a wide range of products, you're sure to get the lowest available rate in the market. Stop worrying about your repayments now and take charge of your financial freedom. Contact a Finny mortgage specialist today on 02 8866 2444 or visit our website at www.finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, and welcome to a brand new episode of the Smart Property Investment Show. I'm your host, Juliet Helmke, part of the team that brings you all your favorite stories over on smartpropertyinvestment.com.au. Now, today I am joined by a very special guest, someone who is going to give us some insight into a market that will be very much of interest to our listeners, but that they perhaps don't know quite so much about. I'm joined today by Campbell Dunoon, LJ Hooker's brand new head of network for New Zealand. Campbell, thank you so much for being with us today.
Thank you for having me, Juliet.
Now, this appointment is a new one. And before we get into some of the market analysis we're going to do, just want to start with a quick question. How's it been for you taking on this role?
Well, I'm only 10 or 11 days in, so far,
so far so good. Great.
Yeah. No, look, it's really exciting for me. It's something that I've been wanting to do for some time. I've been in New Zealand 20 years next week, I think it is. So coming up for the big anniversary.
Wow, congratulations. Yes, big anniversary to celebrate.
It is. And no, I love it here, but I am Australian, born and bred Victorian. And with the 20-year mark coming up, I was doing fine. I just wasn't that challenged, and it sounds like a bit of a cliche, but I was introduced and it all came together beautifully just late last year. So kicking off something different for me in 2024.
Oh, wonderful. And that is a good time to take on a new challenge, isn't it? You know, sort of we've got a new year, really puts a mark in the sand of being able to say, hit the ground running with a little bit of energy. So
Absolutely.
Congratulations. And it's a great way to start off the next little period for you.
Thank you.
Now, seeing as we are talking about the new year and how it provides an opportunity to look forward and look backwards, let's start a little with the latter. So take us through the 2023 market and what agents saw in New Zealand. You know, it's nice to give people an idea of where we've come from so that we can get a better sense of where we're going. So what happened in 2023?
Okay, well, I'm not going to sugarcoat it because everybody here knows it, but 2023 in New Zealand was possibly one of the worst real estate years we've had in living memory. And I'm not exaggerating. I claim it's worse than the financial crisis, and I haven't found too many people who would dispute that over here. And a couple of reasons I'm confident in saying that wasn't just the economic situation and the slowdown in sales and the drop in the sale price nationally and particularly in the bigger markets, but it was also the general feel and the sentiment of the community here. And there were a few reasons for that. So I think for us all, 2023 was a year we are glad that is behind us. I will say, though, the last few months, 3 months or so of 2023, things started picking up. A few reasons for that. The banking sector seemed to have settled down in terms of forecasted interest rate rises. There was a change of government, and whilst I'm very particular not to engage in any political discussion, I think I can speak on behalf of most New Zealanders where a change of what we were doing was perhaps required. And so that there was confidence back in the real estate sector with the change of government. And then it was a countdown to Christmas, and then we're all looking for 2024, and here we are.
Absolutely. And so you touched on some of those economic factors at play that impacted the market over time. I'm interested to hear sort of from these, two major players that we have in real estate. Let's start with buyers. How in particular had those economic factors impacted what buyers were doing over that year-long period? What were you seeing from them?
Well, I think buyers, particularly last year, were very cautious, and quite rightly, because the years before then, just after COVID, we had a run on the market, which again was historic. We had incredible fear of missing out. There was a flight to property that I'd never seen before, and it generated massive sales all over New Zealand, including outside of the larger metropolitan areas, which I think was replicated in Australia, where people were taking their money and lifestyle reasons, working from home, et cetera, moved up the coast or moved into the countryside. So we saw a lot of that. I think what happened was early last year, we were hit with two big events that you can't predict, and an economist never really seems to factor in. And that was one, a cyclone, and then two, massive flooding, which were, funny enough, independent of each other.
Oh, wow.
But with the same result. And if memory serves me right, there was only like a 3-week gap between the two. And
that's really rough, isn't it? It's rough for everybody.
Yeah. And we just didn't have a summer last year. It was actually cancelled. And so I think that the sentiment of the community of the country was quite down with these events, and the infrastructure here has been lacking in terms of investment from governments for many decades. And I think that's all come back and shown itself to be really sadly wanting. So there was a bit of a stock take, and with the run of the year before, people, and with interest rate rises, the buyers just stood back. And it was very difficult to get buyers engaged. There was no more fear of missing out. It was now clearly a case of, we do not want to buy at the top end of the market. We've had enough.
And who were the sellers that you were dealing with? Because obviously, needs fluctuate for people, and the amount of listings that you'll have at any given time fluctuates, but there will always be people who need to sell their house for whatever reason. So what was that cohort? What were you hearing from them over the past year?
Yeah, very good question, because I'm aware of many conversations, particularly in Auckland, where the salespeople would say to the vendor upon, look, things aren't great to sell now. And the salesperson couldn't turn around and say, no, you're wrong, it is okay, because there was such a limited interest in the property market from all sectors for a few months. However, you can always look at it two ways. If there's a lot of people being hesitant, then there's not much stock to choose from, and there's still buyers out there. But there was a property drop last year, and it depends on what data you look at. My first-hand experience was a good 8-10% perhaps from time to time for a 6-month period almost of 2023, and it softened. And I think the general stats were that sales in Auckland were down 50% compared to, for December 2022 to December 2023,
Wow.
Sales were down almost 50% in some sectors of the market, not across the board, but in some sectors. So as I said, that was for 2023, but then the last 3 months it picked up, and it sort of gave us hope moving forward into 2024.
Right. So let's dig into that pickup a little bit and sort of talk about what that looks like, because as you know, we have an audience of sort of savvy investors here, and they're really keen to, I guess, be on the front foot of things in general. They want to know what that pickup starts to look like, because whether it is that they're looking at New Zealand or they're just conscious of being aware of their own market dynamics, it's really good to know what the sort of first signs are of that kind of movement. So when did you start to see that in the New Zealand market, and kind of what did it look like?
Yeah, again, late last year, just Christmas, December was a very busy time for the big markets of, say, Auckland and other regional metropolitan areas. And that really set us up nicely. And I'm looking at the stock coming through with our group, with LJ Hooker and Harvey's here in New Zealand, and with our competitors. And there is a lot of stock coming on the market. So the question we all now are asking, okay, are the buyers coming with it? And I suspect, because so far, Juliet, our summer is good. There are no cyclones on the horizon. And without being silly, I think that everything's sort of falling into place for 2024 and moving onwards. There are some important legal changes and tax changes with the change of government, which I want to inform your listeners, because I think these are very important, particularly for Australian investors.
We'd love to hear about those. Take us through some of that, because I know it has been something that's been a topic of conversation throughout your election cycle, of how that would change.
Absolutely. So the previous government had what was called a bright line test on capital growth of a investment property. That's a nice way of saying a capital gains tax. And it was originally 2 years. Then it was 5 years, and then it was taken up to a 10-year period from the point of purchase to if you sold within that time period. So the new national-led government, whilst the tax changes haven't gone through, they're saying from the 1st of July, if memory serves me right, 2024, it will now be a 2-year period. Okay, so it's gone from 10 down back to 2, and that's across the board, and that'll be taken back into history as well. So if you bought this year, before July this year, you'll be covered by that according to the information that's been provided by Treasury and government departments to date. So that's very, very important. Also, the government has softened and changed the rules with regards to interest deductibility. The previous government made sure that you couldn't claim your interest rate, your interest charges on your mortgage as a tax deduction, which was a bit unusual because any other form of investment, you could claim that quite rightly. And that has now been reversed. So moving forward in 2024, investors and landlords will be able to claim that as a deduction. So big pluses there.
Yeah, that's a really substantial movement that I know will definitely impact a lot of people who are looking to buy property, particularly from an investment standpoint. I mean, it just means everything, I think, for when you're doing really the nuts and bolts of how you're going to make this investment pay off for you. All of that actually has makes quite a big difference to the people who are looking to buy. And so hopefully with that, we will also see what you're talking about, having some of those buyers come back into the market. We're going to be taking a short break now. Campbell, there's lots more I want to talk about in terms of what's been happening in your market over there and what we'll be seeing in the year ahead. So we'll be back on the other side with Campbell Dunoon from LJ Hooker. Welcome back to this episode of the Smart Property Investment Show. I'm joined by Campbell Dunoon from LJ Hooker, New Zealand, and we're uncovering some market insights in his neck of the woods. Now, Campbell, before the break, you were telling us a little bit about some of the legislative changes that have taken place with your new government. Really interesting for our listeners to hear. And in general, the hope that we are feeling for the New Zealand market that buyers will start to follow as listings have started to come back. So, with that in mind, I'd love to hear what you're really expecting from the coming year, because as you've said, we've already started to see some movement at the end of 2023. How do you see that playing out more broadly over the 12 months or so to come?
Yeah, sure. Look, the economic factors aren't too bad for property. First and foremost, our immigration's okay. It's building up. And whilst new migrants tend to gravitate towards the metropolitan centres like Christchurch and Auckland, etc., we are seeing a lot more demand from that sector. So that's positive. I think from a New Zealander's perspective, it's been a case of wait and see for 2023, and now's the time to act. It would appear that interest rates have stabilised and there's talk of them actually coming down a little bit. So that's something we haven't heard for, 3 or 4 years, something of that nature, 3 years perhaps. So that's encouraging. We are getting a lot of people looking to continue the lifestyle change that I mentioned a little earlier. There's certainly a movement towards the regional areas of New Zealand, whether it be the Bay of Plenty, the Bay of Islands, north of Auckland, anywhere within, and I'm sure it's the same for Australia, anywhere within, say, 2 hours of a regional area with all the services and hospitals, etc., seems to be quite sought after. So that's also encouraging for the provincial areas. Across the board, the classes of property, investors, I think, are definitely coming back. Interestingly enough, first home buyers are back, which is really good. And
that's great to see.
Yeah, there seems to be active competition between them and investors in the auction rooms. So those sort of battles taking place are a healthy sign for the market. What I call general retail stock, which is just somebody wanting to move from one home into another home because it's no longer in the right street or they want an extra bedroom, that sort of thing, that's starting to move as well. Funny enough, the top end seems to just be cruising along and seems to have been slightly slowed down last year, but no, it is a market to itself. Once we get up into the premium levels, and you can define that any way you will, but sort of 7-8 million New Zealand dollars plus, there seems to be some good interest from local and foreign buyers.
Interesting. And in terms of, you mentioned some of those growth areas that we might be seeing over this year, really great insight there. What are we kind of expecting to see in terms of prices? Is it a hold steady sort of situation, given the year that you've had, or might we see perhaps in, more specific markets, a little bit of movement there?
Yeah, I think in 2022, the average house price in Auckland was just over $1 million, and now it's under $1 million. And is it 920 or 950? I'm sort of trying to work it out myself, but it doesn't really matter. It's come off the boil. With the amount of stock coming on, I don't expect prices to take off, but I do expect transactions to take off. And I think that's the critical thing. I think people are going to be engaging now in selling and buying real estate. And at this stage, I think it would be a brave person who said, I forecast a massive increase in prices in the first quarter or first half of 2024. Whilst everything I've said to you, Juliet, so far has been positive and optimistic, there is still, small steps. Let's just get this back.
Of course, it's got to be gradual, right? We'd all love to think that, it's just going to take off and rocket fueled growth, but more gradual is probably the way things move under these economic circumstances.
Yeah, there's more of a rational approach, I think, just because of the last year or so. And that's a healthy thing in itself. I do predict certainly more turnover because we've got the stock. We didn't have the stock last year. We didn't have the buyers last year. It was a bit of a perfect storm. Now we've definitely got really increasing stock levels. Everybody's out doing appraisals. Listings are coming through. Auction numbers are increasing. And I'm suspecting we're going to see some good turnover for at least the first half of the year. And then when the legislative changes come into law, even though they're going to be retrospectively applied, I think that will continue. So, yeah, good.
Right,
good for
because
2024.
Yeah, and of course, even with the retrospective application of that, there is obviously buyers tend to really want to have things in practice, right? Before they kind of jump in. There's a little more certainty to it, isn't there, once it's sort of in effect? Yeah, so perhaps that'll be a big sort of turning point as well that we might see. We're going to take another short break. We'll be getting more into the investment potential of the New Zealand market after we return with Campbell Dunoon. Welcome back to this episode of the Smart Property Investment Show. I am joined by Campbell Dunoon from LJ Hooker New Zealand. Now, Campbell, before the break, we were really talking about some of the exciting things that could be happening in New Zealand property in the year ahead. And that's obviously very relevant to our audience who are investors who are looking for opportunity all over. I'd like to talk a little bit more and kind of dig into what you see particularly from investors in New Zealand. So in general, just let's start out there. What is the buyer profile like for foreign investment? So where are people coming from and what type of property are they particularly looking at?
Okay, well, if you're a citizen of Singapore or Australia, you're allowed to buy property here. Now, there are rules governing this and people need to make their own investigations, but because of the treaties involved with the countries, it's much more straightforward than, say, anybody from Europe or the United States, wherever. There are certain advantages investing in New Zealand that the Australians have. One is the silly one in a respect. It's the dollar difference, okay? There's about a 10% variance, so you've got that straight away.
It can almost be a little easy to ignore when it's that small, but it certainly does make a difference when we're talking these big transactions, doesn't it?
Yeah. Putting aside banking costs and the margin they make, if it's an $800,000 unit, and I'll go into some detail about that, well, okay, you're saving approximately 10%. Perhaps not that much, but you get the general idea. So there is that. Secondly, it's a very mature market for rentals and it's a very mature market for investing. It's very much part of the fabric here. So there's lots of legislation and governance over it, which works well for the landlords as well as for the tenants. So I think there's some satisfaction in knowing that if you're in another country, your property has a regime around it, which people should feel confident about because there's repercussions for non-performance and there's a due diligence factor and there's also bond lodgement with authorities, et cetera, et cetera. So it's all quite upfront. The property management scenario over here, again, is quite mature. So you're dealing with professionals who know the rules and regulations and tenant selection, et cetera, et cetera. Obviously, with the tax changes, it makes it much more attractive, I would think, to the Australians. Now, again, definitely not a tax expert, and I know that the tax treaty between the companies will affect anything that I say, but nevertheless, you do have that to look into. There's no stamp duty on a property purchase here, which I'm quite aware that there's certainly stamp duty in my old place of Victoria and New South Wales and everywhere else.
For sure. Yep.
Yep. So you have that. Now, the government is always looking at foreign regulation of buyers, or regulation of foreign buyers, but at this stage, with the treaties in place for both Singapore and Australia, you're okay. Where would you invest? Well, the rental returns are really good at the moment and they're getting stronger, okay? When people weren't buying, they had to rent. So last year, our conversation about not much movement in the property market, well, people weren't selling their property, they were renting it out. People weren't buying, they had to find a rental that really, really pushed prices up. So again, I can't comment on how that contrasts with a property in Greater Sydney or Melbourne, but we've seen substantial growth over here. So you have that as well. And it's not just the big cities, it's also the regional areas for the exact reasons I said before about people wanting to move and head out towards the coast or towards the country areas for lifestyle and convenience.
And in terms of that renter pool, it's so interesting because as we're seeing in Australia, sort of a wave of migration is really impacting that need as well. We have a lot of international students returning. Tell us a little bit about the sort of renter pool that you have there, what the breakdown is, because that, of course, impacts what people might invest in. We see here, particularly, a lot of apartments, units are really looking quite good to cater to that sort of growing student population. So what do you see in New Zealand?
Well, we definitely have that student market in places like Auckland. Auckland, a lot of Australians don't realise this. In fact, a lot of New Zealanders don't realise this, but Auckland's a very much a university city, and the prime real estate is taken over by Auckland University, and there's another university, AUT, next to it. So what does that mean? There's a lot of apartments required and accommodation required for students in the CBD area of Auckland. So you can certainly get in there, and they're really coming back with the restrictions on travel in the last year or so having been lifted. So that sort of market is a straightforward one for the Australians. It would be also easy to understand. It's strata title, which is the body corporate business that you would have in Australia. So the legal ownership aspect is going to be familiar to the Australians. So that market's quite good. But nevertheless, a little further out, not so much the traditional student market, but just the families, the singles, the couples, no kids, the lifestylers, the ones that are just wanting to rent and have the house in the country. We're actually seeing a reverse there, and where people are wanting their main house outside of, say, Auckland and having a permanent rental in the city for the 2 days of work.
Interesting. Yeah, the lifestyle shifts are really driving some of those new trends.
It is a big thing over here. So that's also attractive. And we have property and freehold, of course, which the Australians are used to. We have a couple of other legal ownership structures which they won't be used to, like a cross lease. I won't go into that, but of course, any Australian listening to this needs to get a local lawyer and go through it very, very carefully.
Of course. Now, just speaking about, because it sounds like there is so much potential there for investment, speaking more generally, not necessarily the foreign buyer, just the investor in general. You spoke a little bit earlier about how we are starting to see some increased competition among the buyer pool, which, obviously is great to see for the desire to have a healthy market. So for any investors out there, wherever they're from, how would you recommend that an investor puts their best foot forward when they are going for a purchase?
I guess it's like anything, Juliet, you've really got to do your homework. And nowadays, it's a lot easier than it used to be, because if you spend 4 or 5 hours on the internet for a particular area, you're 80% of an expert, and that 20% is the important part. And that's what you get by talking to companies that have rent rolls, talking to investor groups over here, which they're everywhere, and you can get an idea as to where you should be looking. If you're looking for a rental, and most of the investor market here tends to be organisations, people that focus on just a pure rental. There's no let's move into it in 5 years' time. There's no we're going to rent it out and that maybe do it up and sell it. It tends to be long term. That's the Kiwi sort of thought. And again, sort of guilty of lack of definition, but for me, long-term would be certainly much more than 5 years.
Yeah.
And that's a trend of the market here. So long-winded answer to your question, but there's a lot of tools for you to get up to speed quickly on what you want to do. Where would I invest? If I just had some spare money, I would certainly look at Auckland. Not a problem. I'm guilty of knowing that market very well, so it's easy. But there certainly is a strong demand for rental property there for tenants. You're competing against first home buyers, you're competing against other investors, but hey, that's life. That's okay.
That's the market, isn't it?
Yep.
And just to sort of round us out here, going back to what we mentioned at the beginning, which is that you've embarked on a new role, something pretty exciting. And we have been speaking a lot about your projections for the year, what's coming up for the market, but I'd love to just hear a little bit about what's coming up for you this year. What's really going to be your focus as you get into this exciting position with LJ Hooker?
Well, first of all, it's just getting out and getting to know the network, because it's spread out over the whole country. And I've been fortunate in previous roles going back many years that I got to know all of New Zealand, or most of it, regionally on both islands. So a lot of familiar territory, which I'm looking forward to getting back. The people I've met have been absolutely delightful. They're switched on, and I think there's a lot of opportunity for the two brands over here LJ Hooker and Harvey's, and certainly I've, with the executive team, looking to identify growth markets. But it's not just the big cities; it's the regional areas, it's the areas that are attracting tourism, and it's not just residential, it's lifestyle, which is a category we have over here, and rural and commercial. So I see a lot of upside. In terms of the market, generally, irrespective of our company, I was talking to some colleagues who work for other companies yesterday, and they're quite bullish. They're looking at around a 20% turnover increase in some areas. Now, don't bet on it, but at least people are talking bullish a little anyway.
Absolutely. It's good to have some high hopes. We'll see how things play out, but it's nice to start the year with some some positivity going into things. So it sounds like you have a really exciting year ahead of you, Campbell. It's been an absolute pleasure to talk to you today for this episode of the Smart Property Investment Show.
Likewise. Thank you.
Thank you so much for joining us. Listeners, if you liked this episode, be sure to like us or review us on whatever platform you do listen to podcasts on. Stay up to date with all the latest news over at smartpropertyinvestment.com.au and follow us on our socials, Facebook, LinkedIn, and Instagram. If you have any questions or want to put someone forward who you think would be a great guest on a future episode of the Smart Property Investment Show, send us an email. editor@smartpropertyinvestment.com.au. Until next time, stay well. Goodbye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.